I'm John Kaiser in Toronto at the Metals Investor Forum. It's March 1st, 2020. I am here with Heye Daun, CEO of Osino Resources. Heye, welcome to Metals Investor Forum.
Thank you, John.
Your company is involved in gold exploration in Namibia, a country we think of the skeleton coast and offshore diamond mining, uranium mining, but not gold. Why is Namibia only now emerging as a potential major gold frontier?
A couple of things, I think partially historical. Namibia only became independent recently, so that's one reason. So it hasn't been so accessible to major mining companies and juniors. Part of it technical, because it's mostly covered, makes exploration complicated, and also it's different rocks to what one traditionally would have looked for in gold. But there are many examples of large gold deposits in similar rocks, but that sort of thinking is only now emerging.
Now, you mentioned that one of the obstacles to past exploration and even artisanal workers finding stuff is that especially this region with the supposedly right rocks is covered by an awful lot of sand obscuring everything. And I understand that you are deploying an additional technique borrowed from the Australians that helps you reduce the costs of simple brute force grid drilling through sand cover with a sort of rotary air blast or RC type drill rig. Can you describe this method that you're deploying that helps you make the discovery process so much more efficient?
Yeah, thanks. It is. It's basically a form of geochemistry, but we call it calcrete sampling because traditional soil sampling doesn't work in covered terrains, and soil sampling has been the bread and butter of regional exploration for years. So what we do is we sample a precipitated layer that's within that cover that is called calcrete. It's an evaporation product, and it has very small sort of ionic quantities of gold on it, and we sample that layer, and it has proven to be a viable technique to look through the cover. We still use RAB drilling then to follow that up and test through that cover, but this calcrete sampling has really worked to identify, in this case, a large gold system, and I think it will work to identify additional ones.
So since you did the reverse takeover of a junior a year and a half or so ago and showed what a substantial land position you have in the market, started to realize what a success Otjikoto has, other juniors have acquired land positions in Namibia. To what extent did you have an early opportunity to get what is perhaps the most prospective land to which you can now systematically employ this technique of geophysics, RAB sampling, calcrete sampling, more focused RC drilling? Do you have pretty much the most prospective, or at least obviously prospective ground, or is it just sort of a random, what was available at the time type of collection of properties?
No, we definitely have what I consider the best ground. And the opportunity came from the fact that we were private for a long time. And I'm a Namibian, people know me, so a lot of ground was offered to me. And I was able to secure this when the markets were dead. Nobody could raise money. And so I did some very advantageous deals where I secured some of it. We also applied for grants, so we used different ways to acquire grant. Early on, we made an assessment to identify the most prospective areas, and we intentionally covered certain of those areas. And so now we have 7,000 square kilometers. It's a hell of a lot to do justice to, and so I do think we have probably the best exploration grant for gold in Namibia.
Now, one of the concerns we always have about African countries is potential for civil unrest because of these artificial borders created by the Europeans. What is the situation in terms of social license and local people for like a foreign company from Canada, even though you're a Namibian itself? What's it like getting a social license to do work in this part of the world?
Namibia is a very receptive country to foreign mining investment. Of course, it is also a country that is professional in its approach. So it welcomes mining that's responsible and that has the social license that you talk about. We've had Rio Tinto there for many years. We've had a number of other well-known companies. And so, as long as you follow the rules and you do things right and you do things correctly, you will get a license to operate. And so generally speaking, the population is positively inclined towards mining. There's a great socio-economic needs. People need jobs, and people understand that mining is one such vehicle that can deliver that. So it's it really is a great jurisdiction to operate in.
Now the Caribbean project, where you have the Twin Hills discovery, it's a 50, 60 kilometer stretch of claims that is just to the south of the Caribbean fault, which has always been there. And Anglo Gold found a Navachab deposit, and as you mentioned, it started off with 800,000 ounces, and now, 20, 30 years later, it still has 5 million plus ounces in resource. How is it possible that this company, which was there right from the beginning, was doing the work, was understanding what was evolving, why did they not develop this idea that there's this crustal scale, deep-seated fault that is the potential gateway for numerous splays and shears that come off of it, second and third order structures that are now your target? How is it possible that this was there for your taking?
I guess one of the reasons is that Navachab, that mine that Anglo owned, was always seen to be an oddity. In the beginning it was possibly misclassified, because I think they called it a reduced intrusion. So it didn't fit the traditional model. And so, model-driven exploration, blinkered exploration, people that had a certain view 20 years ago, and as often happens in geology, fresh thinking comes in and people form a different view, and all of a sudden you have success, and that's actually what we've done. So Anglo didn't have that at the time, and these things do happen. Juniors sometimes pioneer new techniques, and we've had sort of some real experts out there. Dr. Richard Goldfarb, he's the world's authority on orogenic gold deposits, and they all agree that this is an orogenic belt. It's just that no one ever called it that before. We are, and it informs our exploration approach, but Anglo never had that, so I guess that's the reason.
So part of bringing you into this area was doing sort of deep geological thinking about what is the nature of these rocks. They're obviously not Archean, they're younger rocks, but they have a similar type of crustal scale faults and that. So before you even started staking this stuff, you did a lot of geological homework. Who in your organizations is the brain behind this geological sleuthing that led you to this concept?
So I would say two guys, Dave Underwood and John Andrew. So Dave Underwood is an ex-Newmont geologist, very experienced, been around the block, Anglo Gold, De Beers and others. And he happens to be a structural geologist. So he brought very much that structural approach, which has led to success. And coupled with his sort of conceptual thinking, we have the other guy, John Andrew, who is the exploration manager, and those two actually manage our technical side together. And John's strength is very much implementation. So he's managed he's hired the team, he's executed the program, and so together they have very complementary strengths, and they have driven this, come up with this, and executed this, and made this discovery.
It's good, and the you mentioned in the talk or in the Q&A that the grade of these systems are not spectacular like the Archean orogenic vein systems. So in terms of your target of what's the sort of tonnage and grade range of what you think is going to be your open pitable prize, tie it up, put a ribbon around it, sell it, and then go off and hunt for others? What's that sort of target range that you guys are shooting for in this setting?
Yes, before I say that, let me just say another reason why we've had success is because we never approached this with dogma. And that's why, even though conventional thinking is that maybe these age rocks, Pan-African or Proteozoic or whatever they are, do not have those high grades, it may not be the case. There are some examples of quite high grades in Namibia associated with the B2 gold mine. So we don't know. But my base case really is the operation that I sold to B2 Gold, because I know it very well. And so that's kind of the target range that I'm looking for. I don't have to fly to the moon. I'm okay. What I mean by that is I don't have to find a tier 1 deposit. That's very, very rare. I'm very happy with a tier 2 deposit. And so to me, the range is, the respectability threshold is 2 million ounces, because that would give you a nice 10-year life of mine for a 100 to 200,000 ounce a year operation. That's a very good size operation for a mid-tier. So that's what I'm looking for. And I believe that's what we have with Twin Hills. I think there is upside. It could grow substantially from there, but that's what we're shooting for initially.
But the key here is repeating this over and over and over again, using the methodology that you've developed and your first mover advantage in this setting.
That's it. That's precisely what we're doing. You've said that well.
Well, that's an excellent way to finish this interview. I've been talking with Heye Daun of Osino Resources Corp. At the Metals Investor Forum in Toronto. Thank you, Heye.
Thank you very much, John.